Welcome everyone to today's presentation on internal controls for governmental entities. My name is Amanda Bernard. I'm a principal with Maillie LLP, and I'm joined by my colleague Dan Niles, a manager with Maillie LLP. To start with our session's outline for today, we're going to identify the need for internal controls. We're going to go over the COSO framework, which is really the backbone, the framework for any good internal control system. And because your organization may have seen some dramatic changes lately due to the pandemic and accommodating remote work and changes to the flow of information, we're going to talk about some changes to internal controls that result from the pandemic. And then I'm going to turn it over to Dan, who's going to talk about designing internal controls over specific transaction cycles. So first, we're going to talk quickly about the definition of internal controls and the purpose. And really, internal controls are the procedures implemented by an organization to make sure the information it produces is accurate. And that leads us to the purpose. And first of all, the main purpose of internal controls is to make sure the financial statements are fairly presented. Management needs to certify that financial statements are accurate, and internal controls give them a comfort level that those financial statements are in fact presented fairly. Internal controls also help to prevent both errors and fraud, errors being unintentional and fraud is intentional. And lastly, some internal controls are put in place to comply with laws and regulations. A good example of that would be bid requirements. When we talk about making sure our financial statements are fairly presented, often what comes up is fraud. So we're just going to go over the fraud triangle really quickly here. So first of all, anytime there is fraud, there's really three components involved. First of all, we have pressure. That's some type of incentive or pressure that an employee feels in order to misappropriate or steal from their employer. Sometimes it's gambling or a drug or alcohol addiction. Sometimes an employee might have medical bills that they need to pay for their children, or sometimes it's just greed or keeping up with the Joneses. The second component to fraudulent behavior is always rationalization. Most people who commit fraud aren't necessarily bad people. They're not what we would consider criminals. So they need to still go to bed at night and wake up and look at themselves in the mirror the next day. So they need to come up with some sort of rationalization, which is the frame of mind that allows them to steal and then justify those dishonest actions. The third component of the fraud triangle is opportunity. This is the actual circumstance that enables that employee to carry out their theft. And so when we look at the fraud triangle, again, all three of these components are present in just about any fraudulent action. We don't have much control over the first two, pressure and rationalization. We don't always know when an employee has a gambling or an addiction problem, and we certainly can't look inside their head to see what they're seeing and how they're rationalizing their dishonest behavior. So that really leaves opportunity. That's the one area of the fraud triangle that we as an organization and management have some level of control. So we want to, in order to reduce theft and fraud, we want to control opportunity by implementing proper internal controls. And when we talk about internal controls specific to governmental entities, there's certain risks that really only apply in this government arena. So one good example is governments are accountable to the public at large. And that's a tricky one because sometimes public opinion varies quite radically. So you might have some individuals who want to raise taxes to pay for parks and conservation, and others don't want to see any increase in taxes for any reason. So there is this conflict that exists, and that creates additional risk, and therefore it affects our internal control environment. Second of all, governmental entities are faced with a situation where some of the positions in their organization are either elected or appointed. Those running the organization may not even fully understand it. So there's a classic story about the Secretary of Treasury for the IRS, who you'd think he would understand taxes in general and the rules of his organization, the IRS, when in fact he ended up testifying on the stand that he didn't even understand that he himself needed to file an income tax return and report income that he received on a Form 1099. So it just goes to show that you can be appointed or elected to a governance position and not even understand the basic concepts of what that organization's goals are. Another implication of a governmental entity is they're not always up to speed on the most up-to-date information technology. So some situations, the government may be running on a technology platform that's decades, 50, 60 years old. You're putting Band-Aids on it and fixing it as you go. You even sometimes have to pull somebody out of retirement to fix an antiquated technology system. And that's not something that's unique necessarily to governmental entities, but it certainly is something we see quite frequently. Governmental entities also tend to be smaller in size. Anytime you have a smaller size entity, we see general lack of segregation of duties. You're not able to properly separate the reconciliation and custody functions. There's minimal controls in place. You may lack formal job descriptions and have employees that are wearing multiple hats. You could have a receptionist that's both collecting sewer payments and helping people fill out permit applications, for example. A few additional risks, you're working potentially with protected classes. That's minors, patients in a healthcare environment, or prisoners in a county level governmental unit. And so, for example, FBI fingerprinting is an internal control that we may only see in the governmental environment. You also have a lack of a profit motive and deal with appropriations and budgets. In the for-profit world, there's really one goal, and that's to make money for your shareholders. And that's where governmental entities tend to be a little different. You have that potential for the use it or lose it philosophy, so that you want to spend every penny in your budget so that you get the same level of funding the following year. That's something very unique to internal controls and affects the internal controls of a governmental entity. You also have compliance with grant and donation requirements. You're receiving both restricted and unrestricted donations, grants, and all of these require additional accounting to make sure you're spending the funds for their intended purpose. So all of that does flow into risk, and anytime we talk about risk, we also talk about internal controls, and that leads us to the COSO framework, which again, the COSO framework is really just that backbone to any good internal control system. COSO came about as a result of the Treadway Commission report in 1987 that basically said, look, there's a lot of fraud going on in the corporate environment, a lot going on out there where financial statements are misstated because of people stealing. Take a look and let's see if we can do anything about it. So they formed COSO, which is 5 organizations that came together. It's the AICPA, the Institute of Management Accountants, internal auditors, and basically these 5 organizations formed COSO and came up with this internal control framework in 1992 to respond to the risks of fraud in the corporate environment. The COSO framework is made up of what we know today as the COSO cube, and you can see the picture on your screen. And really it consists of 5 overarching principles: the control environment, risk assessment, control activities, information and communication, and monitoring activities. And the concept of the cube is that these 5 principles really permeate your entire organization. You see it in operations, reporting, compliance, and throughout all levels within your organization, the entity level, divisions, operating units, and even individual functions. So the COSO framework was then subsequently revised in 2013, although I wouldn't really call it so much a revision as a little bit of an expansion. They came up with sub-bullet points for each of these 5 principles that expanded a bit on what their goals were for those specific areas. It's also important to note that we spend a lot of time on the control activities, that third item in the cube. And really that's where Dan's going to focus his part of the presentation, the transaction level control activities. But we want to make sure we went over all 5 because you need all 5 really in place, functioning and operating together in order to have an appropriate internal control framework. So that leads us to the first area of the COSO cube, and that's the control environment. This is really the concept of having integrity, ethical values, and an overall good tone at the top of your organization. And that always starts with the board of directors. You want to make sure you maintain an independent board. You don't want a board that's simply rubber stamping everything management gives them. You want to make sure that they're overseeing and monitoring and performing that independent oversight duty. Tone at the top also comes into play when you're looking at management's philosophy and operating style. If you have a management group that doesn't seem to care, then you're going to end up with employees who don't care. So really, it's that culture of your organization and the overall tone at the top that sets the tone and the culture of your entire organization. You also want to make sure your board of directors, management, that there are people involved with the daily operations and oversight that have financial reporting competencies. Make sure that they know what they're looking at when they're examining a financial statement, for instance. The control environment also involves making sure you have an adequate organizational structure and are setting appropriate authority. So for example, who has the authority and responsibility for approving disbursements? Is that within the appropriate level within the organization? And lastly, human resources. You need to hire the right people, competent people and people with integrity so that you don't end up with fraud and excessive errors. And that leads us to our second area of the COSO framework, risk assessment. I would say by far this is probably one of the most important areas. Risk assessment really is important, especially with today's environment when we're dealing with a lot of change. So first of all, it's important to understand that every organization has risk. I can't tell you how many times we've gone into an organization for an audit and the first thing we do is sit down and we say, okay, what are your risks? You know, what's happened this year that has increased your risk? And inevitably the response is, oh, well, we don't really have any risk. Everything's going good. We have, adequate controls in place. Our personnel have integrity. So yeah, we don't think we have any risk. And really that leaves us scratching our heads because every organization has some level of risk. So in those areas could be in operations, accounting, compliance. They could be risks resulting from error, which are unintentional mistakes, or somebody could be committing fraud, and that again is a risk. So when we come in to do an audit and look at risk assessment, and again, this is something that we're doing all the time, and we can definitely help you in this area if you need assistance. We look at what can go wrong. So what can go wrong in the payroll area? And maybe an answer is, well, somebody could put a fictitious employee in the system and that employee could get paid. What could go wrong in the cash disbursements area? Well, we could pay for a good or service that we didn't actually receive. On the operations side, what could go wrong in food service? And I never liked this one, but what if we served spoiled food to children? Obviously that is potential risk, even though it's a little far-fetched. So we have risks in almost every area within our organization. The next thing we need to do is evaluate those risks. We need to determine what represents a high risk versus a low risk, and it's a cost-benefit analysis. We need to look at both magnitude and likelihood of the risk. So again, looking at that food service one, so what is the likelihood that we're going to poison children with spoiled food? Probably very low. But what is the magnitude of that risk? Well, it's huge, right? You could be talking life or death. You could be talking the public outcry and reputational risks. You could be talking about lawsuits and litigation costs. So although that's an issue that could result in high magnitude of risk, the likelihood is also probably fairly low. So that's just an example of how you would go through that risk assessment process in order to identify the risk areas that represent high magnitude and high likelihood. And that's where you're going to focus your time. Inevitably, some risks you learn to live with, minor issues that are determined to both be low in likelihood and magnitude. Those are the risks that we like to call insurable. So we'll just deal with it as they come along. Our insurance will cover them. And then that brings us to change management. So again, we've seen a lot of change lately due to the pandemic, and change always creates more risk. And it's therefore the perfect time to take a step back and reevaluate your risks and perform a risk assessment with a fresh set of eyes. So some examples of changes that create risk. In some cases, we've seen management are kind of forced to override existing controls that are in place in order to implement COVID programs that are much more rapid pace than we've ever seen before. Overriding controls obviously increases our risk. And another example there, and I think this came about before COVID, but we have the GIZA program where they came out and said, well, you don't have to bid out these projects. Now, granted, you're still responsible for making sure that those funds go to an appropriate vendor, but they took away that bid requirement. Well, guess what? That increases your risk. Another area that increases risk due to change is change in personnel. You may have new personnel filling in for old personnel. You might have somebody who's been out of the office for weeks, either because they contracted COVID or they're taking care of somebody else, or their children needed, assistance while they've been out of school for the pandemic. So all of these changes in personnel also increase risk. Working remotely, and that goes hand in hand with the increased use of information systems and technology. These also bump up our risk. Things that used to be done in days in the office now might take weeks at home. And also you have a general sense of loss of control when the people that you work with aren't right next to you in the office. We're also transmitting data through emails or accessing information online through a portal or through, a VPN system into our servers. And all of this is new and it creates more risk. And the last two, even outside of COVID, you can have new regulations, legislation, or even new accounting pronouncements. GASB's been coming up with new pronouncements left and right here, and each time they do, that creates additional risks that we need to examine related to the areas the GASB applies to. So again, that's really just an ideal time to go back and take another look at your risk and perform a risk assessment. And of course, we can't just start or stop with a risk assessment. We then have to look at the internal controls we can put in place. That brings us to control activities. We need to close that gap, implement new policies and procedures in order to address our risks. So our policies are established and the procedures are really what puts those policies into action. You want to make sure your procedures are documented and revise them regularly. And Dan's going to go over most of the control activities section and getting into some really practical items that you can implement in your design of your internal controls. But I'm going to cover some of the more overarching principles here, and one of which is controls over information technology. So really what we want to remind you is technology, again, risk has gone up because we're using it more than ever, and that was a little bit even before COVID. Technology is increasing at a quite rapid rate, and whenever risk goes up, we need to make sure our internal controls follow. So one way you can implement internal controls over technology is to perform some extra employee training. Make sure your employees recognize what is a phishing attempt in email, that they know what links not to click on and what email attachments not to open. You can go one step further and actually perform penetration and phishing tests. A lot of IT companies are willing to come in and do this for you. They'll actually attempt to hack your system or attempt to get your employees to click on that link. And then you can follow it up and close the gaps and train your employees further to make sure it doesn't actually happen. You want to make sure you're implementing a wide variety of security technologies, your firewalls, antivirus softwares, VPNs, and portals, all with the attempt to really secure your information and make sure nobody from the outside can access it unintentionally. You also have access control. So these are your passwords, and password security is huge right now. You need to have it on your computers, your Wi-Fi, and each individual software program on your computer. You don't want your employees using, for example, the Wi-Fi at Dunkin' Donuts, because you could have somebody, in a public Wi-Fi environment access your data without even knowing it. And make sure they have passwords on their home Wi-Fi as well, because there's stories out there where somebody can be parked alongside the road and hack into somebody's personal Wi-Fi because it's not password protected. You want to make sure you're using complex passphrases and require your employees change those passwords regularly, every 30 to 60 days. And you could also consider using multi-factor authentication. That's where you're receiving a 6-digit code on your cell phone that you then have to enter online as part of your password logins. You want to make sure that all your employees log off their computers even when working from home. That's an important one too. Not too many people think of, fraud or something happening just for leaving a computer sitting in your home office, but there's actually instances where people have lost a whole day's worth of data because their 4-year-old climbs up and uses the computer while somebody's making their dinner, So even outside the idea of fraud, we can have unintentional data loss as a result of leaving a computer on and unattended. Data input controls are also quite important. These are data validation. So a good example is a software system that doesn't let you enter a journal entry without making sure the debits equal the credits before posting. Data sharing and transmission controls, also extremely important. We're transmitting more information than ever through email. Those emails you need to make sure your data is encrypted if the data is confidential or even if it's not. And if you're sending attachments, make sure they're password protected or otherwise encrypted or secure. And also with control activities, it's important to remember there's 2 different types. We have preventative controls. These are controls that are going to identify and stop fraud before it even happens. Your segregation of duties, access controls, those passwords, or pre-transaction approvals like somebody approving a cash disbursement when they're looking at an invoice. Detective controls are going to identify fraud after it's already happened, or errors, in fact. And these are reconciliations, your post-transaction reviews, and your reports and monitoring controls. So I think the most important thing to remember about maintaining control activities is that anything you were doing before the pandemic, you need to continue to do that control. So although remote working has kind of put a kink in some things, you want to make sure you're still performing those controls. You just might have to change how you're doing it, your method of performing the task. So a good example is if you are approving cash disbursements, you might have had a stack of invoices in front of you before and hand initialing the invoices as you review them. And now you're left with a PDF file on your server that you need to open. Well, maybe you're using an Adobe, your stamp functions to put your initials on each page, each invoice. So you're still performing that same identical control activity, you're just modifying the method that you're using. The next area of the COSO framework is information and communication. So really the gist here is that we're talking about obtaining and generating information and data and making sure it's accurate. And we're also talking about the communication aspect, and that's both internal and external. So the one important thing here on this slide is I want to talk about the tip hotlines, because when somebody commits fraud, almost always it's identified through a tip from another employee. So if nothing else, if you don't have some type of whistleblower or tip hotline or some directive to your employees of who they should contact if they identify something strange that they might think is fraud, you should put one in place, because that is the most important part of internal communications, and it's a great internal control to prevent fraud. Monitoring is the last component of the COSO framework, and also, again, one of the most important functions to remember. So you want to make sure that they think you're watching. Let them know you're watching. And there's a variety of ways this can be done. Some people like to set up cameras on cash registers and make sure everybody knows that they're visually watching. But sometimes it can just be done through asking the right questions. Maybe you want to call up your coworker or your teammate and do a quick surprise monitoring visit and say, hey, let me see all your bank reconciliations for the past 12 months. In fact, you don't even need to spend the few hours it might take to review those bank reconciliations, but even just that concept that you asked for them gives that person the thought that, hey, they're watching, they're keeping track of what I'm doing. And therefore, that can also greatly reduce fraud from the beginning. And some of this is a little more difficult in a remote environment. You have people working at their house that used to be right next to you in a cubicle. And so we do have some distance issues there, but use your Teams meetings, your Zoom meetings, and check up on people. You can still request those bank reconciliations. Just do it, and again, modify your methods, but maintain the same level of internal controls that you've always had in place. You want to perform ongoing evaluations of your internal controls. If you find deficiencies, report them, take action, and revise your procedures accordingly. And lastly here, just a reminder of some of the challenges and changes that we've seen as a result of COVID here. So for one, we've seen a little bit of an inability to perform some of our control duties while working remotely. And again, I think the most important thing to remember there is, although you might have to modify the method of the internal control, it's really important that you still attempt to do that procedure and keep those policies in place. Inadequate staffing or expertise has been a real challenge over the past year. We've had people out and new people hired, and people who are learning how to do their job remotely for the first time. And we've seen hiring people that you haven't even met in person. All of these represent challenges, but these challenges can be overcome with adequate training. Communication has also been a challenge. I know when we first went remote, it was kind of radio silence for the first couple weeks until we got the hang of how to communicate in the new remote world we're working in. And that means maybe more phone calls, setting up regular Teams meetings, Zoom meetings with your staff, and making sure everybody has that open line of communication, that they know they can still reach out when they need to, and that you're there when they do call. We've seen a lack of reliable and timely information. Information that used to be available within a couple days might now be taking somebody a week to produce because it's more of a challenge to do remotely. But again, it's just the concept of work to speed up that timeliness and increase your ability to get that information and make sure that it's still reliable. Data transmission issues has been huge. Again, we've seen more information transmitted through email than ever before. You want to make sure that that data is encrypted and secure, especially if it's confidential. And lastly, and this is an important one, we've been focusing on survival for the past year rather than on internal controls. You know, your first instinct every time is we need to make sure our employees are healthy and that they're mentally stable to do their jobs. And the least thing we've been focused on is internal controls. So now that we're a year in and things are starting to settle down and somewhat return to normal, it's the perfect time to revisit your internal control processes and make sure that you're covered in all of your major areas. And again, if you leave today with nothing else from my portion of the presentation, I want you to remember that it's the perfect time to do that risk assessment. Take a minute, take that step back and really look at what could go wrong and what internal controls you could put in place to really close those gaps and increase the accuracy of the information you're producing. So now that you've heard a little bit about the internal control framework, the importance of that risk assessment, and how technology has had a huge impact, I'm going to turn it over to Dan to go over some of the most common internal controls that we see in practice. And he's going to go through some really practical aspects and things you can implement in each of the transactional cycle areas. So thank you, everyone. I appreciate your time today.
Good morning, everyone. For the next 25 to 30 minutes, I want to share with you some practical and cost-effective internal controls that you can implement at your local government. So Amanda just explained some of the conceptual framework and reasons for why internal controls are important. So now we're going to look at some practical application. We're going to cover some key areas such as general business controls, your cash receipt cycle and your customers, cash disbursement cycle and your vendors, payroll cycle and HR, financial reporting and closing, and banking and credit cards. Some of the things we're going to talk about this morning are pretty basic, and hopefully you're already doing a lot of these. But as we go through these slides, think about the controls that you currently have in place at your organization, but also think about what controls might be missing that could be beneficial to add. Also, think about ways you can explain to management and the board about how and why these controls will improve operations, increase efficiency, or reduce risk. The overall goal for this part of the session is to come away with at least one or two new controls you can implement. We do have a handout available that has a list of different controls for you to consider. It's not an exhaustive list and it doesn't cover everything, but it should help you get started thinking about the different types of controls, and we'll cover several of these this morning. Another thing to keep in mind as we get started is it's important to realize that not all of these controls will make sense for your organization. Obviously, each entity is unique. There are smaller boroughs and townships that might only have 2 or 3 employees in their business department. There are other townships and school districts that might have a dozen employees in their finance department. So obviously the controls are going to look a little bit different for each entity. There's not a one-size-fits-all model. So your controls definitely need to be tailored to your specific entity. And lastly, it is possible to have too many controls in place that you end up hindering the operations of the business. So be aware of that and make sure that the controls you implement make sense. Make sure they're necessary and ideally cost-effective. So when a local government is functioning normally, there are a number of statutory and regulatory duties that it must carry out on a day-to-day basis. And there are numerous different internal control processes that business managers and finance managers must follow in order to safeguard the financial assets of the entity. This can be a difficult task to begin with, and it's even more difficult to do in the midst of a pandemic. A lot of things have changed over the past year. Many local governments have had to make adjustments to their processes in order to continue to carry out their essential duties. Some entities have had layoffs or people out due to sickness or mandatory quarantines, and they're occasionally operating with a depleted workforce while still trying to implement the necessary controls to protect their assets. Many government offices have remained open throughout most of this pandemic, while others have primarily been working remotely or with staff on a rotating basis. So although many organizations have pivoted to remote work, generally speaking, your internal controls don't really change. So for example, if someone would previously sign off on an invoice or approve a timesheet, those sign-offs should still happen. That approval and sign-off is the control. However, because you're now working remotely, the process itself might change, where now it might be timestamped with an electronic signature instead of an actual pen to paper signature. So the process might have changed, but the controls usually can stay the same. So keep that in mind when you're thinking about doing things differently in a remote environment. What is the control and what is the process? What can be modified and what should stay the same? Next, identify essential versus non-essential duties and personnel. If you haven't done so already, a local government needs to determine which duties and which personnel are absolutely required to support essential functions. Some normal activities, processes, and projects will be suspended as the local government adapts to meet the community's essential needs. This takes coordination with management, the governing board, and other departments to make the determination for what is essential and what is non-essential. We've all been operating in this pandemic for over a year, and while there is light at the end of the tunnel, it's very unlikely that things will completely go back to normal. So now's a great time to reevaluate your essential and non-essential tasks. Next, streamline processes and procedures as much as possible. So normal finance operations and controls are designed for normal work environments. Again, what we've all experienced over the past year has been anything but normal. So obviously things need to be modified to meet the current work environment. This requires some creativity at times and flexibility. The changes that have been made or changes that still need to be made aren't going to be perfect right away. So because of this, you should strive to make things as simple as possible while maintaining vital protections against fraud and error. Next, document processes, train staff, and rotate duties. Like I just mentioned, local governments have at times needed to work remotely and with less staff. Staff might be sick or out caring for children or other family members. For smaller governments where only one person can perform an essential task, the individual should carefully document how the task is performed in writing so that it can be done by another employee in an emergency. Cross-training is very important with this. Then lastly, communicate and collaborate. Communication is key, obviously. I think we've all experienced what good communication and bad communication looks like, so you need to communicate clearly, concisely, and often. So the first area I want to talk about are some general business controls, and at the top of the list is segregation of duties. This is critical for good internal controls. However, we do realize that this isn't always possible. You might only have a budget for 1 or 2 office staff, and you're somewhat limited with just resources. So if segregation of duties isn't possible, then you need to create additional controls to compensate for this, such as requiring a second person review. You could get the board members involved somehow, or do a surprise audit or inspection of some kind. Next, set up a hotline. One of the best ways to uncover a fraud is by receiving tips. So if you don't have a hotline set up yet, consider implementing one. Next, bring in an outside CPA. So I know many of you on this call this morning are not CPAs, and maybe you only have one person who really understands the debits and credits of the accounting system. So bringing in another accounting professional to periodically review the transactions does 2 things. 1, it creates more accountability and transparency, and 2, this person can help detect fraud, errors, or waste. So basically, having a second set of eyes on the books and records can be very valuable for your organization. Close the books on an annual basis and make sure that any year-end journal entries are recorded and agreed to the audited financial statements. So most of the accounting software, it allows you to do a hard close of the books. So doing this basically locks in the prior year data, which prevents someone from going back and changing something either accidentally or intentionally. Next, ensure that the audit trail in the accounting system is functioning so you can track the activity and history of when transactions are recorded and who recorded them. Ensure that there's proper supporting documentation for all transactions entered into the accounting system. Next, document all policies, procedures, and internal controls in writing. Obviously, laws change, technology and software changes, so these manuals need to be updated periodically. Also, when you make an update, provide copies to your employees and provide any necessary training. Sending out an email blast with the new policy attached might not be the most effective method. Sometimes it requires more in-depth training, so try and keep that in mind as you're reviewing your documents and your policies. Also, confirm that essential positions have procedural documentation that is suitable for a backup or replacement. So again, these should be in writing and easily accessible so that someone can pick up and reperform the task if needed. I've seen this happen often where an organization has an employee who's been there for maybe 5 years or 10 years doing a particular job, and when that person leaves or retires, they take all of that knowledge with them, and the organization basically has to start over from scratch. Sometimes the organization might even have policy and procedures manuals in place, but over time, that particular person might learn a more efficient way of doing something, or there might be software limitations. So the person does certain tasks manually or off on the side, and the process might just, it doesn't work out exactly like it's laid out in the manual. And so the manual is outdated and incomplete. So making sure there's up-to-date and accurate information in your manuals is key so that someone can easily reperform the task if needed. On a similar note, cross-train employees when possible. So maybe you have 2 or 3 administrative staff in your office. Make sure they understand each other's roles and responsibilities, as this will help ease the transition if an employee leaves or is out of the office for an extended period of time. So you might not know every single detail of each other's jobs, but having a general understanding and having the appropriate documentation in place will really help with this. Moving into cash receipts and customers. So we've all heard stories about theft of cash from local governments. And usually thefts are caused by decentralized collection points and just a general lack of internal controls. So because of the nature of what governments do on a daily basis, many governments can have up to a dozen different cash collection points, such as your recreation department, your police department, your water and sewer department, building and code enforcement, your courts. For school districts, you have multiple school buildings, you have your student activities, you have sporting events and other clubs and organizations, all of which are potentially receiving cash on a daily basis. So with cash flowing in so many different places, it's no wonder that theft of cash is common. Each cash receipt area may have different accounting procedures, some with a physical receipt book, some with computerized or electronic receipt process, some might have no receipt process at all. So although it's not always possible, having a more centralized cash receipt system reduces the possibility of theft. And then next, many governments lack sufficient accounting controls for cash. So it's more likely that cash will be stolen if the cash collections are not documented. But if the transaction is recorded, then the records must be altered or destroyed in order to cover up a theft. So that's why it's critical to record the cash transaction in the accounting system as quickly as possible. So here's some additional steps that you can implement to help enhance your cash controls. Number one, keep all cash locked in a secure location. Seems pretty obvious. You should not store cash in a desk drawer, an office, or a classroom. It should be kept in a Dropbox or a safe, and make sure that safe is actually locked. Number two, deposit cash timely, preferably daily, and require the composition of cash and checks to be listed on each deposit ticket. Number three, use a centralized receiving location and eliminate any unnecessary cash collection points. So for example, maybe you require that all cash payments be made at the main business office. But if it's not practical to use one centralized location, then periodically perform surprise inspections of those other locations or departments that handle cash. Also, you can consider providing the main admin office with a security camera or a webcam for those separate locations so that you can monitor the activity. This will allow you to check in whenever you want. Number four, segregate duties as much as possible. Again, this is a key control that we're going to see over and over again. One person should not have complete control over the entire process. So the person creating the deposit slips and handling the cash should not also be the same person entering those receipts into the accounting system. The person reconciling the bank statement shouldn't also handle the cash collections. You should try to split up these tasks with different people as much as possible. Then lastly, number five, if possible, try to avoid accepting cash altogether and use electronic payment methods instead. This is becoming very common, and there are dozens of different apps and programs that you can use to do this. You can also incentivize electronic payments by eliminating any extra charges for processing fees that the government might impose. Then some final controls for cash receipts. Immediately issue receipts to all customers when you receive their payments. It could be a physical receipt or some kind of email confirmation. Restrictively endorse all checks upon receipt, and always verify IDs for check and credit card transactions. Moving on to cash disbursements and vendors. So the first one, guard all check stock as though it were cash. You need to keep blank checks in a locked filing cabinet in a locked office, and limit the number of people who have access to these checks. Make sure your checks are issued in sequential order and document any missing checks. So periodically review your check register, and if you issue checks 101, 102, 103, and then 105, you need to find out what happened to 104. Was it voided? Was the physical check damaged or torn when it was being printed? Was it misplaced? If you can't find this check recorded in the general ledger, then you want to look and see if this check did clear the bank statement. And if it did, you definitely need to investigate and see what happened to it. Next, avoid using signature stamps on checks if possible. So these stamps can be convenient, especially if you have a lot of manual checks that you're signing. So if you do have one, you need to make sure it's locked in a secure location and don't share it with other employees in the office. This includes digital signatures too. I've actually seen some entities that have the CFO or the business manager's signature scanned in as an image, and other employees in the accounting department have access to it, which basically gives them the ability to sign things without this person's knowledge, and it creates a huge risk. So try to avoid using these stamps if possible, but if not, then you need to take the proper precautions. Next, limit check signing authorization to as few people as possible and remove any old signatures immediately. So if the finance director retires or if a board member's term ends, you need to remove them as a signer on the account right away. And you should also review this list of authorized signers with the bank at least annually. Setting a dollar threshold for payments, this is a pretty common control that most entities have. Review all invoices and verify they're for products or services actually received. So this can be done with a signature or an initial on the invoice from the person who actually received the product. Next, set the accounting software to disallow duplicate invoice numbers from the same vendor. This will help reduce duplicate payments and mistakes. Randomly select invoices from vendors and do an internet price check. Obviously, you don't need to do this every day, but maybe one time a month, pick 3 or 4 vendor invoices and do a quick search online and check the prices and compare them with the prices on your invoice. Next, use Google Maps to verify vendor addresses. Google Maps will often give you a street level view where you can even see the company's sign out at the front entrance. So doing this will help ensure that it's a legitimate vendor and that you have the correct address. Again, you don't have to do this every day, but maybe you decide to do this with any new vendor before entering them into the system, or whenever you get an updated address from a current vendor. Next, compare payroll and vendor addresses. This is another good fraud test because very rarely would you expect to see an employee and a vendor with the same address. If you do, you probably need to investigate and document the relationship and why this is okay. Next, verbally verify email requests before making payments. We've all heard stories of these business email compromise scams. So maybe the township manager's email was hacked and an email is sent to you telling you to make a wire transfer. Or maybe it's from a vendor telling you to change the bank account info for online payments. So if you do get an email like this, stop by their office, make a quick phone call to verify that it's accurate and it's legitimate. So related to this on the IT side of things, conduct regular security awareness training. This can be done with simulated phishing attacks, for example. You need to teach your employees what to look out for so they don't inadvertently infect your system with malware or other viruses. Then the last two are pretty common. Require a supervisor or manager to approve expense reimbursements and limit the time an employee has to submit an expense report. Moving on to payroll and HR. Most of these are pretty basic controls that hopefully you already have in place. The first one, use electronic time clocks or automated time tracking software to track employee hours worked. Have supervisors review, verify, and approve the hours that are worked. Reconcile timesheets on a weekly basis and ensure that overtime is properly paid. Verify that all employees on the payroll register are real people who actually show up for work. So you're searching for these ghost employees. This might be easier to do in a smaller government where you can just scan the pay register and you recognize all the names. But with a school district that might have 100 employees, it might take a little more effort and you might need to use some data analytics or other tools instead of just scanning the pay register. But verify that the people who are getting paid are actually real employees. Next, use direct deposit for payroll checks and search for duplicate direct deposit bank account numbers. So very rarely would you have 2 employees with the same bank account number. And so if you do find a match, you need to document it and explain why this is. It's possible it could be a husband and wife who are both teachers at a school district, or an employee's son or daughter who works part-time during the summer. But you should be doing these checks internally and look for these duplicate bank account numbers. And then the last one here, maintain written policies for the use and approval of paid time off, vacation time, and sick time. Conduct background checks. So many organizations require background checks for all employees, but at a minimum, you should conduct them on employees who have access to the accounting or IT systems. Conduct regular training on how to protect company information. So there are a lot of different scams out there, and employees are generally the last line of defense, so they need regular training. Conflict of interest questionnaires, you can have your employees fill these out. You can also have vendors complete them as well to disclose if they have any kind of personal or business relationship with a local government official or employee. So again, for example, if you're a purchasing director at a school district and your spouse has a business that sells items directly to the school, this relationship probably should be reported and disclosed. And then finally, define employee responsibilities, especially if they're responsible for any kind of control activity. Make sure that's documented in their job description and reviewed with them during periodic performance evaluations. Moving on to financial reporting and journal entries. One of the most important ones at the top of this list is reconcile accounts on a monthly basis. This includes your bank accounts, your credit cards, your AR and AP ledgers, and this should be done timely as well. You shouldn't wait 3 months after the fact to reconcile your bank statement. It most likely can and should be done within a week after month end. So as auditors, this is one of the first things that we request and that we review, because if the bank rec doesn't work, then odds are pretty good that the other accounts are going to be off as well. The next few are on journal entries, and it's actually pretty common to see organizations with little controls over the entire journal entry process, both the posting and the recording, and also the review and approval. And sometimes nobody's really reviewing journal entries at all in detail. So sometimes we'll ask a client who can post journal entries and who can review them. And they'll say, well, all entries are prepared by the finance director, and then we provide the board the general ledger detail each month at the board meetings, and that's when the approval happens. So if this is what you do, my follow-up question would be, how closely does the board actually review those specific journal entries? If you give them 30 or 40 pages of general ledger detail, are they even able to follow and track the specific journal entries? Do they even have the knowledge of what they're looking for? So it's definitely good that the board is involved, but maybe a better policy and control would be to have the finance director prepare a journal entry, but then have someone else like the township manager review and sign off on each specific entry, at least when it comes to the non-recurring journal entries. And then finally, if you're able to, try and rotate reconciliation duties and encourage employees to take annual vacations. And when these employees are out on vacation, have their tasks performed by other employees in their absence. So this routine cross-training that I talked about among the different positions can definitely help with this process. And often it's when someone else performs an accounting function that fraud, errors, or simply inefficiencies can be discovered. Some of you might be familiar with the story of Rita Crunwell. She was the city controller and treasurer of Dixon, Illinois, which has a population of around 16,000. And Rita managed to steal over $53 million of public funds over a 20-year period. It's the largest case of municipal fraud in American history. If you're interested in learning more, there's actually a documentary called All the Queen's Horses that you can find on Netflix or YouTube. It's pretty interesting, so I would encourage you to watch it if you're interested. So Rita was hired in 1983, and her fraud started in December of 1990. So what happened was the city of Dixon had 6 legitimate bank accounts, but Rita opened a 7th account with a local bank, and it was in the name of the city of Dixon and RSCDA. However, she was the only signer on this account. So over this 20-year period, she created over 150 fictitious invoices, supposedly from the state of Illinois, and she would repeatedly transfer city funds into this secret account until her fraud was discovered in 2011 by a coworker. And it was discovered when Rita was on 12 weeks of unpaid leave. So during that time, a coworker discovered the secret bank statement with several large deposits that really had nothing to do with city business. So normally what would happen is Rita would pick up all the mail, including the bank statements herself, or she would give her coworker a list of bank accounts and would tell her to call the bank and just request the statements for those specific accounts. But this one particular time when Rita was on vacation, her coworker Kathy was feeling rushed, she was under the gun, so she just called the bank and told them to send her all statements in the city's name. And this is how she found that secret account. So after she looked at it, she told the mayor, who then called in the FBI, and they started an investigation. The investigation took about 6 months until Rita was finally arrested and convicted, and the city tried to recover these funds. It was a relatively simple fraud. It wasn't too complex, and from what they could tell, she was really the only one involved. But one of the things that Rita did was she made the city's finances so convoluted and so confusing that nobody else could really understand it. She had all of the knowledge and she controlled everything. Like I said, she received the mail, she wrote the checks, she reconciled the bank accounts. She had complete control over all the money coming in and going out of the city. And there weren't proper controls in place. Nobody else was really in a good position to review her work or question what she was doing. So in hindsight, there were several red flags that were missed. One of the biggest ones was her personal lifestyle. She operated a multi-million-dollar horse farm, but she only had a salary of $80,000 a year. And so most people just assume she inherited the money or something like that. But another interesting red flag was a neighboring city of Sterling, Illinois, actually sent an email to the city of Dixon 2 years earlier saying that something in their financials just didn't seem right. So Sterling had a similar population and a similar budget, and they were comparing their budget with other local cities around them, including the city of Dixon. So Sterling always showed a surplus, but the city of Dixon repeatedly showed a deficit and had over $20 million in debt. So at a high level, one specific control you can implement in your government is to compare budgets and other financial reports with other local governments of similar size. You might be surprised what you can find. So it really is a tragic story, but it's also somewhat fascinating at the same time. And it goes to show that even smaller governments can be susceptible to frauds like this. Maybe not of this magnitude, but many smaller governments probably have someone like Rita who's trusted and well respected. You know, they've been there a long time. Everyone loves them. They seem confident and they're good at what they do. But this story should be a good reminder and should caution you as to what can happen when internal controls are abandoned and when there's no segregation of duties, no monitoring, and no oversight. Moving into banking and the credit card. So the first control I have listed here is periodically request from your bank a list of all accounts in the name of the government or with the government's tax ID number. And then compare this list of bank accounts with what's set up in the general ledger. So this was basically how Rita's fraud was discovered. So if her coworker didn't request all of the bank statements, her fraud likely would have continued to go unnoticed. So we sometimes perform this step as auditors where we send a confirmation letter directly to the bank requesting a listing of all the different accounts. And a couple of times that list has come back with additional accounts that the government wasn't aware of and they weren't tracking or monitoring properly. This is definitely something you should be doing internally as well. Next, have bank statements mailed directly to someone outside of the accounting department. So this person could review the bank statements for any unusual activity. And you could also ask your bank if the statement can include any images of cleared checks. On a related note, another thing that's good to do is to provide some basic accounting training for all of your staff. It's important for your staff to understand some of the basic concepts of accounting and be able to understand the financial statements and other reports that they're looking at. This goes for the board members as well. It's hard to spot a fraud, error, or waste if you don't really know what you're looking at or looking for. Some other controls I have listed here are pretty common. So using online banking and ACH when possible, and set dollar thresholds for transfers between accounts that would require additional approval. With your company credit cards, that's another common source of theft and fraud within organizations. So limit credit cards to key personnel and have separate cards for each employee. Make sure that they're stored in secure locations, including RFID wallets. Set up alerts for any transactions over a certain dollar amount, and obviously make sure you get receipts for all company purchases. Here's one last checklist summarizing some of the key items that we discussed. So first one, obviously adhere to the policies and procedures that you currently have in place. So whatever controls you already have in place, make sure those are being followed and make sure everything's documented properly. Provide training to employees, like I just mentioned. Provide for segregation of duties. Ensure that one person does not have total responsibility for a process from beginning to end. If this isn't possible, then you need to make sure there are other compensating controls in place. Focus on the areas that are most susceptible to fraud first, and then also try and rotate responsibilities if possible. You also need to establish clear lines of authority, ensure physical security over assets, review and update policies and procedures continually, look for ways to improve and evaluate performance regularly, ask for supporting documentation, especially for journal entries, and then the last one, of course, report any suspicious activity. So as we wrap up our session and you consider what you learned this morning, I want you to think about your specific organization. Maybe you already have strong internal controls in place, so think about what works well and why this is. Is it because of the multiple levels of approval? Is it the segregation of duties? Is it the monitoring process? Is it because of how well things are documented? Think about why the controls work well. Maybe you realize your controls aren't as strong as they could be, so think about what can be improved. What areas are most susceptible to fraud, error, or waste, and focus on them first. Regardless if your controls are weak or strong, there's always room for improvement. So what is one new control that you learned about today that you can implement in your organization, and how will this benefit your organization? you have any questions or if you would like to learn more, feel free to reach out to one of us or to your Maillie representative. Thank you for your time this morning and have a great day.